Hello everyone. In this video, we're going to take a look at Mullen, trading under the ticker symbol MULN. Mullen has had many people hooked on its price action, as a significant portion of their capital might have gone into the stock, hoping to be in the right direction of the significant volatilities that the stock has had. So in this video, we're going to look at its latest news, the ongoing price action, and the best course of action. Before we begin, if you like my analysis, please consider to like, comment, and subscribe to my channel. Also, please consider to save any of the equipment links down below as bookmarks so that next time you make a purchase on Amazon, of any good really, not just the products currently in links, I may earn a small commission at no extra cost to you. Many thanks for your continued support, and let's start with today's topic about Mullen. Mullen Technologies recently released its 10Q filing, which reveals a lot of essential information about the company's financial performance, strategic decisions, and the future prospects. So we're going to take a look at what the report is saying about the company and which insights it is revealing. One of the primary points of interest in the 10Q report is the disclosure of the number of authorized shares and the potential for further dilutions. As of August 14, 2023, Mullen has a total of around 184 million outstanding shares. This figure, which is previously known to be around 643 million shares back in June 22nd of 2023, underwent a lot of fluctuations, which does cause concern for potential dilutions. It also has some inconsistencies in the number of outstanding shares within a short period of time. The report indicates that between June 22nd and 23rd, the outstanding shares increased by 137 million. So this is followed by a jump from 780 million on June 30th to 1.6 billion on August 14. The company's management did not really provide a very clear answer to people's question in this matter, and I would say that it does sparkle some further worries that there will be further dilutions until 2024-2025. This discrepancy underscores how important it is to maintain investor trust in the management communications and the actions concerning many major decisions, but especially dilution. With authorized shares remaining at around 5 billion shares, there is a potential for further dilution. Plenty of room for that, which raises the question about the company's future equity structure and the shareholder value. On one hand, it's hard to picture how much lower can the value keep going. On the other, it's true that the company needs capital in order to keep the lights on. So in that sense, we might actually see further dilution if the situation continues to be very tight in terms of cash flow. Alright, so speaking of which, Mullen's liquidity and cash positions are obviously drawing a lot of attention from investors, with the company reporting approximately $214 million in cash and equivalents as of the reporting period. However, it appears to have inconsistencies in the report as well compared to previous announcements. So back in March 16, 2023, the company said that Mullen has around $87 million in cash and equivalent. So which should, be suffice for the next 12 months. But this disparity does require some clarification. Where does the additional 130 something million dollars come from? As the reported cash position seems to have increased significantly during such a short time frame, while we know for a fact that they certainly don't come out from operations. This should also be something that a company should have explained with more clarity, but they did not. Mullen's earning report also indicates progress in the revenue generation, which is a significant milestone for the company. The report shows a total of $308,000 in vehicle sales, which is a very notable step towards Mullen's first earnings from the vehicle sales. But what's even more significant in my own eyes is not necessarily this, but a gross margin of $59,000, highlighting the initial profitability from those sales. Considering Mullen's current production levels is still very low, the full economy of scale has yet to be realized. With that being said, if anything, there should be one massive positive news for Mullen out of all this, and it should be this. A positive gross margin is what we want to see with any startup company, because it is a testament that the core idea and that the operations would make money as long as the volume picks up, which can be acquired with additional capital injections or partnerships. Of course, given the current state of fundamentals and how much trust there might be or might not be between the company and its shareholders, it's up to debate how much good does the news actually bring. Additionally, the expenses are also being analyzed. The R&D expenses increased by 200% on a year-to-year basis, reaching around $22 million. This report attributes the expense to engineering, consulting, prototyping costs, and so on. Meanwhile, the general and admin expenses totaled around $31 million, which raises some concerns about the expenditure management. The company's approach to debt management also needs some attention. It reduced its debt and eliminated most of its high-interest promissory notes. Maintaining some debt on the balance sheet may be strategic, but again, the discrepancy between the reported cash and the cash equivalent does kind of compound the reduction in debt as well. So we should ask ourselves, where does the money come from? And hopefully the company will be able to explain that a bit more clearly in the future. So essentially, Mullen Technologies 10Q does provide investors with insights into the company's financial status and the future prospects. The key concerns do revolve around the dilution, the inconsistent communication, and the company's cash position. The potential for dilution and the reset is significant, and I think that investors should closely monitor Mullen's financial updates and the management actions to make informed decisions about their investment in the company. So right now, the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and decline quantitative easing, as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities, are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility as investors adjust their risk-return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far-reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins, potentially affecting stock valuations and investor sentiment. The reduction or the end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflation. Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, it's going to remain interconnected with the global economic landscape. For long-term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. With that being said, short-term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions, instead of choosing ETFs. Now, regarding the course of action to take about Mullen in the current state as is, I think that the fundamentals are showing that things may be looking slightly more positive, and that the worst of the sell-off is now behind us, which is not really hard to say, given that over the past year, Mullen's value decreased by 99.8%. That being said, the company is still too volatile to be considered as an investment, so I would definitely recommend to have a small stake and to stay aside in the short term. To make sure that things are filtered through, that the dust is set off, and in the medium term, I believe that Mullen will be able to have some additional volatilities, so it's always a stock that should remain on your short list.